You know about cryptocurrencies, you know about blockchain, but have you heard about crypto exchanges? And even if you have heard of them, do you really understand them? What they are, what they do, and what you need to know about them, and how they may impact you. If not, and I'm going to go out on a limb here and say you probably don't, then this is the video for you. Hello, my name is Charles Araujo, and I'm principal analyst with industry analyst firm Intellyx, and I'm an author, speaker, and futurist examining the future of technology and its impact on the world around us. I'm here today with Peter Pongracz, business development manager with blockchain pioneer DECENT, and we're going to get some answers for you. We're going to dig into this new topic that somewhat surprisingly hasn't been talked about much yet, and give you a leg up by giving you everything you need to know about crypto exchanges. Peter, thanks for being with me here today.
Thanks for having me, Charles.
Okay, well, let's not beat around the bush. Let's just dive right into this. When I signed up to host this video series, and I saw this topic on the list, I have to admit something. I had no idea what we were going to be talking about. I mean, I don't claim to be a blockchain expert, but I do cover the space. But I've heard next to nothing about these exchanges. So, as my father always told me, the best place to start is at the beginning. So let's start there. What are crypto exchanges and what do they do?
Okay, so it's actually a really basic but a really good question. So what they really are is quite simple. They are a place, they are a platform, they are an intermediary where buyers and sellers meet in order to buy and sell their crypto, either for other cryptos or exchange their crypto for another fiat currency. So on an example, Bob owns one Bitcoin. He wants to sell it for about 10,000 USD. He places a sell order on the exchange. He waits until Alice, who wants to buy this Bitcoin for 10,000 USD, submits a buy order. And basically, boom, the magic happens. So now Bob has 10,000 USD and Alice has one Bitcoin.
Okay, so a lot like then the way I would think about a traditional money exchange. Is that what you're telling me?
Yes, correct. So, I mean, the idea of crypto exchange is quite, I would say, I screwed up. Okay.
Here, I'll give you, I didn't like my question anyway. We'll do it again. So sorry, JD, we're going to edit this out. Start again.
Okay.
So a lot like the way a stock exchange might work then. Is that what you're saying?
Yes. So, I mean, the idea of the crypto exchanges is nothing new, you know. Obviously, the precursor of this was the traditional exchanges where you can buy and sell stocks, and basically the business model and everything else has just been altered to accommodate the crypto itself and to enable the technical aspect of these things.
So is that all there is to it, or is there more? I mean, maybe is there some history that kind of led to this?
Yeah, sure. I mean, very brief history. I mean, pre-Bitcoin and pre-blockchain, so to speak, there have been many different experiments like e-gold, web money, which were some sort of, you know, a way, shape, or form of electronic money. But for some reason, none of these reached very wide-scale adoption. And after all of this, you know, in 2008, the Bitcoin white paper was written by Satoshi Nakamoto, and after that, in 2009, the first block of the Bitcoin blockchain was mined. So that's kind of the starting point of everything there is to this.
Okay, well that makes sense. I get it now. I mean, I almost feel a little silly that I wasn't able to connect those dots there, but okay. Fair enough. But so if you've been watching any of the other videos, you know, though, that I'm, you know, as much of a why person as I am a what person, right? And so at the risk of continuing to expose my ignorance here, break it down for me. Why is this important? Why does this really matter in the broader context?
Yeah, I mean, so when we are talking about exchanges, they are, as we mentioned before, they are nothing else but a platform where people can buy and sell their crypto. There are many different reasons to why they are important. I mean, first of all, without the shadow of doubt, they are blockchain's probably most lucrative application to date. The second part I would say is after these various blockchain companies have raised funds or ICO, they actually conducted an ICO, an initial coin offering, and they would actually need a place where they would be trading their coins, right? So they could be used for various different things, such as community engagement, disbursement of the tokens, also investment, of course, and last and most important, speculation.
Okay, it makes sense. And then, when you talk about, you mentioned something that it's one of the most important applications. Can you dig into that just a little bit more?
Yeah, of course. So the easiest way I tend to explain blockchain is blockchain itself would be the train tracks, and each application that's running on top of the blockchain would be the actual trains or the coupes on top of it. So obviously we are talking about the exchanges. The exchange essentially is an application
I see.
running on the blockchain.
Interesting. Okay. All right. So that makes sense, but I think it's probably important for us to get a little bit deeper, into this, right? I get the general terms of this. I think that part does make common sense, and it is fairly simple, but I have a feeling there's a little bit more to that, right? I mean, are they all the same? I mean, when you talk about these exchanges, are there different ways to structure them, and what do people need to know about that?
Yeah, of course. That's a very valid question. I would firstly start between the difference between centralized and decentralized exchanges. So essentially, what centralized exchanges are intermediaries, as we mentioned before. They are middlemen, and they enable people to trade and meet on their platform. As opposed to decentralized exchanges, much like cryptocurrencies and blockchain, they are decentralized. Which means that they are utilizing blockchain or distributed ledger technology to facilitate this trade. So basically, on one hand, the buyer, they basically just match the buy and the sell orders without the central authority.
So is there an advantage or disadvantage from your perspective for one versus the other?
I mean, it's hard to say. Up to date, centralized exchanges have been more successful, of course, because they are, the number one idea behind these business models. But we see a lot of activity in the decentralized exchange space as well. So I'm a firm believer that this could be the future, and this could be really unstoppable.
So you mentioned about business models. So there are different types of business models, the way these exchanges, at least I'm not sure maybe you can dive into this, what the different business models are, and do they vary then from centralized versus decentralized?
Sure. I mean, firstly, let's focus on the centralized exchanges in order not to confuse people. This is the easiest example, perhaps. So basically, their business model is rather simple. Firstly, they either charge a transaction fee on the transaction, or they charge a listing fee. So the transaction fee could be on both sides, on the buy and the sell side as well. So basically, they just take a cut of the transaction value, or the listing fee, which would be a one-off fee for adding a new coin to the exchange and basically enabling the trading of this particular coin.
Okay, and how about on the decentralized side? I mean, given the fact that there's no one there to take a cut, how does that work? Or is there, I guess, how does it work?
On the decentralized side, they take a very marginal transaction fee, which is really, really negligible. So that's the business model there so far. But many people are working on these things, and it's really a community effort. In my personal opinion, if there were a government crackdown, or they would basically try to ban exchanges, decentralized exchanges would be the place to go.
Interesting. So what about security? I mean, obviously it's a major topic anytime we're talking about crypto or blockchain. I mean, how does that play into these exchanges?
Yeah, that's a very valid question. Firstly, let me clarify one really important aspect of this topic. So no blockchain has ever been hacked. Again, no blockchain has ever been hacked. Only the application built on this blockchain have been hacked, such as exchanges, for example. So if you read about any sort of hacks, that's a hack on the application level. The blockchain itself has never been compromised.
Okay, so that would then sort of solidify that the security, in fact, is very important. So is there anything that we should know about then from a security perspective and when we're thinking about exchanges?
Of course. So We will dive into greater detail about hot and cold wallets later, but the first and most important thing, you should always be controlling your private keys.
Okay.
Which means that if you are keeping your coins on an exchange's wallet, that means that you are not controlling your private keys. That means it could be a security danger right there. The second part, I would strongly encourage everybody to keep at least most of their coins that they aren't trading on a daily basis and on cold storage, which are essentially these USB kind of devices. I'm sure most people heard about them. The second thing is definitely use two-factor authentication, which is nothing else but an application that you install on your phone, and this is used to sign the transactions. But again, the most important thing is you always need to control your private keys.
Okay, so the message there really is sort of traditional security hygiene, keep control, and okay. So what about anything else if someone is going down the road around exchanges that they need to know about, either opening an account, or is there any other little kind of tidbits that before we move on from this area that they should know about?
Yeah, I think we kind of forgot about perhaps the most important part, which is the KYC, know your customer. So this is quite a standard procedure, which is required by all financial institutions, such as banks whatsoever. So when you open an account and you open it on a regulated exchange, they will require a passport or an ID scan, sometimes even a selfie of yourself, in order to validate that you are not a criminal whatsoever.
So can I just give him access to my Instagram account and call it a day? Would that work?
No.
Fair enough. I feel like we're making some progress. Let's dig a little deeper, though, in terms of how the mechanics of this, how this all works, and the different components that actually make this up. So can you kind of walk us through those pieces of it?
I mean, the first and perhaps the most important building block of an exchange is liquidity. So liquidity is basically just the ability to buy or sell a token without affecting its price. So for example, if you start selling a big amount of tokens on an illiquid market, that means that you are going to be pushing the price down. If you start buying a big amount on an illiquid market, you will push the price up. So you actually affect the market.
And so you're saying you want an exchange with enough liquidity that isn't happening?
Correct.
What else? What else is out there that I need to be aware of then?
The second component would be the order book, which is basically nothing else but a book where all the buy and sell orders are recorded. So when a buy order gets matched to a sell order at the same price, the order gets executed. So it's that simple. What else do we have?
Yeah, I mean, it sounds a lot like like you said, a traditional stock exchange would work. I mean, these are some of the same issues. Do they have some of the other kind of stuff as far as dealing with spreads or dealing with any other kind of issues?
Yeah, they do. So many things are inherent from the traditional stock exchanges. The spread is actually a really good point. So what the spread is essentially the price between the highest buy or bid and the lowest sell or ask on that particular exchange. So sometimes my buy order, my sell order is here, and my buy order is here. And if this is the difference between the two of them, then nothing's happening. So nothing gets executed. So they need to be in equilibrium. Somebody is selling and somebody is buying at that particular price.
Okay. Anything else kind of around how they work that people need to know about?
Yes. So basically, when it comes to orders, there are many different types of orders, but let's cover the basic types. So we have instant orders or market orders, which is essentially the price that the market is at right now. We also have limit orders, which means that basically you're setting a higher or lower price than the market is right now in order to buy or sell at that particular price. So you're basically betting on the price to go up and down, and so you hopefully will make more profit.
Okay. All right. Well, I mean, I think that there's a whole lot there, and there's a whole lot to digest around all of this. But I feel like there's still probably even a little bit more to this story. I mean, as I'm kind of trying to process, and it's almost, it feels like we're stepping back in time a little bit to when some of the early stock exchanges were created, people were kind of figuring out monetary situations. And so I imagine there's a lot of similarities here. But as people familiarize themselves with exchanges, are there additional things they should be considering? Perhaps limitations or the players that are involved, how, when they're kind of, because there's choices, right? There's different places, different exchanges I could use. How do I make those decisions?
Wow. That's a tough one. Yes. First of all, I would definitely be looking at the so-called Bible of blockchain and cryptocurrencies, a website called coinmarketcap.com. So basically all the major cryptocurrencies, all the major exchanges are on this website. So this is your starting point. It definitely doesn't hurt to look at where the exchange is based, what country, what jurisdiction, if they are regulated or unregulated. So in most cases, the simple Google search will cover these points, but you should always do your due diligence as well.
And you talked before about the whole centralization or decentralization. Are there degrees of that? Is there anything that I should be looking at from that perspective?
I mean, as everything is set up today, I would say most exchanges are centralized around the company that's running the exchange or the people who are running the exchange. So it's we could call it a paradox between blockchain and decentralization, and then you have these exchanges who hold a large amount of money, and this is when problems happen, like the Mt. Gox situation in 2014.
And what about you talked about the importance of private keys and using cold storage and what have you. Do some exchanges make that easier than others, or is that just something that I should be worried about?
Essentially, if you're keeping your coins on the exchange, they have security mechanisms in place. So most exchanges keep the larger part of the pot on cold storage, and then they have some sort of API or mechanism that would pull additional so-called inventory from this cold storage to their hot wallet, which is the actual wallet where the trading is happening at.
I see.
So that's something to be looking at.
So it's important to understand that. And what about, traditional technology, interface, or actually, I'm also curious about like bots. I know there's a lot of talk in a lot of areas. Is that an issue here at all?
You could call it an issue. You could call it an opportunity. Of course,
okay.
For some people, the bots are here. The bots are trading. The bots are connecting to the exchanges through the APIs, the application program interface, which is basically a set of protocols, tools for building a software application. So basically, it allows the applications to communicate with each other. In our case, they can they can be used for data collection, trading, exchange, account management, details, etc., as well.
Okay. Wow. Okay. So there's a whole lot to kind of get your head around here when it comes to this, and we just don't have time we're almost out of time as it is. So if somebody is listening to this and they're trying to sort this out and trying to perhaps make some decisions, or they're examining this space, is there anything that they can do, or a place they can go to kind of get a little bit deeper into this, or specifically with what you guys are doing in this area?
Yeah, sure. We're actually working closely with some small and bigger exchanges in order to help them some of the technical problems they are having. So if you are interested to learn more about this, please check out DECENTcryptoservices.com. Again, DECENTcryptoservices.com. That would be it.
Okay. All right. Well, I have to admit, I'm sort of exhausted. That was a whole lot of information in a really short amount of time, but I think we accomplished our goal. We set out to give everyone here a peek inside the developing world of cryptocurrencies and these exchanges, and I think that that's exactly what we did. So, Peter, I want to thank you for walking us through that, for helping us get our heads around what these exchanges are, why they matter, how they work, and the things that we need to be aware of as we start going down the exchange road. I'm sure there's a lot more to discuss in this topic, as we've kind of already covered here, but I think this was a heck of a great start. So I really appreciate the way you broke it down for us in this really easy to understand way.
Thanks for having me, Charles. It's an absolute pleasure.
All right. Well, with that, it is another wrap on another educational and insightful conversation. Make sure you watch the rest of the videos in this decent video series exploring blockchain in the real world. I'm Charles Araujo, and for myself and Peter, thanks for joining us.
Thank you.